I had a few people reach out to me about this topic, which is a big one. So I figured I'd go ahead and make a quick video to explain. The question was, can you elaborate more on lowering the death benefit, raising the cash value, and how that affects agents' commission? So let's briefly dive into the details of a participating whole life policy, specifically what PUAs are and how they intertwine with the death benefit and how it affects agents' commissions. So let's break it down. The PUA stands for paid up additions, which essentially means additional insurance. And in the IBC community, we like to call these the boosters on a rocket ship. You know, when designing a rocket to send into space, you have the main rocket and then it has these boosters attached to them. And these boosters give it enough oomph to get through the Earth's atmosphere in the orbit. Well, the main rocket is your base premium, which is required for this rocket to even be called a rocket. The larger the base premium, or the bigger the rocket, the more expensive that rocket is, which gets the rocket salesman all hyped, right? Because he just sold you the biggest rocket in the warehouse, and it might not even get off the ground, let alone, break through the Earth's atmosphere. That's a typical whole life policy, the biggest rocket in the warehouse. And that's why Dave Ramsey, Susie Norman, and the likes of those people scream at you and say, whole life insurance sucks. Buy term and invest the difference. Because, not properly designing one of these policies and getting the policy right off the shelf, it kind of does suck. Unless you want that high death benefit for estate planning or whatever. But in this case, that's not what we're after. What we're after is high early cash value. What we're after is trying to emulate the banks to take back control of our debts and expenses. What we're after is trying to get to space. So this is where the boosters come into play. The paid up additions, they create this storage container. And given our example of the rocket ship, this container holds fuel or cash to boost the main rocket up further and faster so that we can get as high as possible, as fast as possible. But there is a limit. There's a limit, and it's called a modified endowment contract, or MEC, which restricts us from putting too much fuel or too much cash into this rocket, or else, right? Taxable event, the rocket blows up. The IRS says, no, hold on. This isn't life insurance anymore. This is an investment. Ask anyone who's in the financial space. If the government has to step in and regulate something, it's probably something pretty powerful. But let's get back to the rocket, because we know that just like all rockets do, at some point those boosters have to fall off. And now you continue on with just a base policy. But at that point, you're already in orbit, man, right? And that's where the magic happens. That's where you're able to look back and see the beauty of what life has to offer. Your specially designed and engineered rocket continues to thrive because you understood the importance of those boosters. Now, when it comes to commissions and the structure of the policy, this matters. It matters 1,000%. Now, would you rather have this huge overpriced rocket sitting in your yard, or a rocket that was specially designed to make it into space in the most efficient way as possible? Remember, the bigger the rocket, without the assistance of the boosters or the paid up additions, you're just getting a big chunk of metal. And your life insurance agent is getting a big chunk of change. Now, why would an agent like myself opt for lower commissions? Well, it's about long-term relationships. It's about providing value. It's about creating a life of abundance. It's about showing people a better way. The wealthy have been using this strategy for over a century. We live in the world of information. If you need to do your due diligence, ask questions. If you're going to YouTube content, I suggest Chris Nagel, Brent Kessler, Hannah Kessler, which is Brent Kessler's daughter, Devin Burr, Caleb Gillian, Nate Scott. All these guys have content out there just explaining this stuff in great detail. Or you have direct access to me. Call me, ask me questions, comment below. and I'll either get back to you right away, or if many of you had the same question, I'll create another video so that more people with the same question can understand what this concept is all about. For people who more than likely will do business with me down the line, whether it's in real estate or private money lending, whatever, because they took control of their wealth and they understand the process and don't know what else to do with the overflow money that they never thought they'd be able to create. Then we can talk about other options and stuff. But I really don't want to make this video so long. So until next time, right? Restructure your mindset, reposition your wealth, recycle your legacy. This is reinvestment banking.